Welcome to Real Estate Investing Unscripted, a podcast from Fund That Flip, where we explore some of the most creative, innovative, and inspiring stories from the real estate investor community. With expert tips and success stories you won't hear anywhere else, you'll come away with inspiration on how to improvise in the unscripted world that is real estate investing, so that you can dominate your next real estate deal. Now your host, founder and CEO of Fund That Flip, Matt Rodak.
Welcome, everyone, to this episode of Real Estate Investing Unscripted. I'm your host, Matt Rodak, founder and CEO of Fund That Flip. And I am super excited again today about our guest, Liz Faircloth. She is the co-founder of the DeRosa Group, which is a New Jersey-based owner of commercial and residential real estate. And they are on a mission to transform lives through real estate. Liz is also a fellow podcaster of the show, the Real Estate InvestHER show, which we'll be talking about more soon. But first, let's welcome in Liz.
Hey, everybody. Matt, thanks for having me on the show.
Yeah, awesome to have you. Thanks so much for being here. You know, it's funny because I met Liz and her husband, Matt, probably like 3.5 years ago when I was just starting this company. So it's super cool to have you here.
Absolutely.
So maybe get us going. Just love to learn a little bit more about the DeRosa Group. What are you guys up to? You know, kind of where do you invest, and you know, just the story of how you guys got started.
Sure. So we're based in Trenton, and we focus on buying multifamilies mostly that either need work or that are more like apartment building value add opportunities. We got our start in Philadelphia, right outside of Philadelphia. We bought our first duplex when we weren't married. We were engaged. No, we weren't engaged. We were boyfriend, girlfriend, my husband and I. So, and my father ended up giving us a loan on that property.
Fraught with peril right there. Fraught with peril. It worked out.
It worked out, but I'm so thankful it worked out. I think about that a lot. Like, God, that didn't have to work out, you know? So, but yeah, just to rewind a little bit, my husband and I, that was our first purchase. We ended up, both came from middle-class families, hardworking families. And my husband was in sales and I was in graduate school, finishing up graduate school. And we actually met. One of our first dates was meeting my sister and brother-in-law. My brother-in-law is an entrepreneur. Only one that I ever really interacted with quite a bit. And he started his business and he gave me Rich Dad, Poor Dad, which I know a lot of people in this business start with Rich Dad, Poor Dad. But more importantly, like one of our first dates with my now husband and my sister and brother-in-law was playing the cash flow game. And anybody listening, you know, if you haven't ever played that just game doesn't get talked about enough. And I have to tell you, beyond just Rich Dad, Poor Dad, the book, the game actually was it's very experiential. It's like Monopoly on steroids. And it just gives you this opportunity to start getting familiar and talking about the kind of real estate investing lingo. And that both kind of really opened, as funny as it is, and as in itself as like a game, it opened our eyes to like the power of real estate. And we started to look at property and said, what if we were to do something like this? And we just got more intrigued with it. We both liked the idea of investing in something and building a business on our own. We didn't come from families like that, but I saw my brother-in-law and he was working his butt off on his own business. I'm like, God, if I'm going to work really hard one day, I'd, might as well work on my own business type of thing. So that got us intrigued. We took courses. Long story short, we ended up probably about a year or so. We went to DIG, which is a very great organization outside of, right inside of Philadelphia. Took a bunch of courses and really then got into this duplex. It was a good learning. It was, I think we evicted our first tenant. We found bullets in her room. Like it was just a bunch of craziness that happened. But it actually was, it worked out because we ended up doing our first 1031 exchange into a 4-unit in New Jersey. Because of the work I was doing, I had to live in New Jersey. And my husband, or boyfriend at the time, was living in right outside of Philadelphia. So we decided to let's get focused on Jersey and investing in Jersey at that time. So then we got married and started really building our portfolio in Trenton, Mercer County, and that kind of area. And then over the years, we've expanded into other parts of the country. And our newest project is a 166 unit in Kentucky that will be closing in on December. So
very cool. And I don't mean to date you, but I like to get a sense of like
when we started,
when we started, like where were we at kind of in the real estate cycle when you guys got going?
Yeah. So we've kind of felt all the different, effects actually so we got started. That duplex we bought in 2004. And then we did our 1031 exchange. We got married. Within the same month of getting married, we basically sold the duplex, got married, and my husband quit his, very high, successful, engineering sales job, which he did very well with, but wasn't passionate about it. And he said, why don't you keep doing your work? You enjoy it at least. And then, come along with me once I grow this thing. And that was in 2005. And so it's been quite some time. Long story short, I ended up quitting my job, joining him 2008. And then we all know what kind of happened then, at the crash and, the beginning of the crash, I guess. And I ended up coming into the business at a tough time. We had about 25 units at the time, and we kind of plateaued, and it was tough. That was a tough, I can even talk a little bit about that, but it was a tough time in that the market didn't help because, when the crash happened, that was the best time to be buying, right? That was the best time to be really leveraging and getting into new, buying things with cash and what have you. But we were doing the opposite because we were trying to maintain all of our assets. I quit my job, which, I was kind of bringing in money, any money that we made through my husband's efforts. We were, investing in the business. We bought assets. So, the next couple of years was really tough for us. We had plateaued and we were using all of our own money or our immediate family's money. We just were plateaued. 2010 came along and my husband and I were like, you know what? Why don't you, we both decided it was better for me to go back to the work I was doing. My boss gladly took me back, which was really nice. It was consulting work and she was happy to have me back. And then my husband, that's really when we started to grow our business through private money. And then we were able to start raising private money through equity partnerships as well as private lending, and really kind of quadrupled our portfolio from as much progress as we made from 2004 to 2010. We literally quadrupled our portfolio for the next, half of our tenure here. So it really made a difference when we started to say, okay, we got to start bringing in private capital into our business because we were just plateaued.
Yeah. So what caused that shift in mindset? Was it, well, now this money is becoming more available to us because we have this track record, or was it, something that kind of tripped you guys of all right, we got our 25 units. How do we get to whatever the goal was, 2,500 units? What kind of caused that shift in mindset? Because that's it's a big jump, right? When you start taking other people's money,
it's huge. It's scary.
Yes.
Matt. So it's very, you want to do right by people, and you want to make sure you're getting into investments that work, and you want to take care of people, and make sure that what you say you're going to do with the investment or the project happens. Right. So when we ended up making that leap, it wasn't, I wish it was more kind of conscientious as at that moment we kind of made a strategic plan, and I can't say that we did it that way necessarily, but what I can tell you is we both were I remember just talking to my husband a lot, and we had made, make a lot of mistakes when you start. I mean, we bought a commercial building, we bought raw land. I mean, we bought multifamily. When I tell you we got involved in everything, we did. And that's one of the worst things you could possibly do in this business. And so what we learned over the years, we did some reflection. The big learning there was, what are we doing well? What are we good at? Where have we had success? And there's, things that you may not have had success with, but there were things that we were doing really well. And buying multifamily, fixing it up, refinancing it, doing it again and doing it again in the area that we knew, in the area that we were breathing and living, and especially in Trenton, we knew it well. We just started to say, let's do more of that. And then we said, okay, well, we're kind of tapped, we need to start bringing in more private money. And we didn't say it probably with those words, but we kind of said partners. And then I ended up having coffee with a friend of mine from grad school. It was kind of random. He worked at a financial institution, and I was in sales. I was back doing my consulting work. So I knew he was in the city, and I'm like, what, we should have coffee. Maybe I'll be able to, talk to him about what I'm doing in my consulting work. I had no intention actually to talk about real estate. And we're talking, and he goes, what are you up to? And I told him, and he's like, how's your husband? I'm like, he's good. We're growing steadily in our real estate business and doing investments and things. And he's like, I wish I can get into that. I just don't have the time. So, I said, well, you need to really talk to my husband because he's got the time, and he's got the expertise and a good track record, So that ended up being one of our first kind of outside immediate family private money. And that was an equity deal. It was 50-50. We did all the work, found the property, did all kind of like the hustling of the project, getting tenants in, managing it, everything. And he put the money up. And that was one of our most successful projects, and we financed that. We sold it since then. And, I think he's involved in every one of our projects at this point. And that was 2010. So that's really cool. And I would say, just to answer your question, it's like you start to say, where do we want to be? What do we have to bring to the table today? And how do we partner up with people that can create some win-wins? That's really ultimately what this business is about. You cannot do this alone. You just can't. So
there's two things that I think I'm pulling out of this. The first one is you kind of got to know who you are and be, somewhat have a focus of hey, we're the DeRosa Group. We're finding value add apartment buildings and that's what we're good at. Mm-hmm. And once you have that clear, here's who we are, you want to talk to everybody about it, right? Because you never really know, a great example of who's gonna be oh, I could stroke you guys a check and what would that mean for your business? And I think it's hard to what I found, it's hard to raise money when you're I'm in real estate and I'll chase the shiniest object and
right.
do whatever.
Right.
No one wants to write that check, right?
No.
But it's here's what we are, here's what we do. We do it exceptionally well, and here's our track record. The money starts to find you, and it becomes a lot easier just to talk about it to everyone because it's very clear about what you're talking about.
Absolutely.
That's really cool. So I want to get into a little bit of you're working with your husband in the business, and it sounds like you've also brought in family and other close people into your inner circle around your deals. How do you guys think about maybe you don't, but how do you guys think about siloing your universes of this is a business talk, this is a family talk with the kids, this is Thanksgiving dinner, half the table's got money in our projects. How have you guys built that life that intersects between putting food on the table for your family and also very close to a lot of people that you care about?
Yeah, it's a good question. It's it's something that with regards to our actual family, both of our parents are involved and have been involved in our business. Beyond that, in terms of immediate family, no one else is. So siblings and all those sort of, so at family events, usually, and our parents are just been great supporters, and they both sets of parents were not millionaires, just hardworking people who saved money and just did it right, Yep. So in terms of immediate family, that's really it on kind of who's actually financially kind of supported us or invested with us or continues to. We actually still do projects with both sets. But yeah, I mean, in terms of the, actually with when I'm working with my husband, we've worked together since 2004. I mean, that's 14 years. We've been married 13 years. And what's interesting is that for the first 8 years of our marriage, we didn't have kids. So we waited a really long time for lots of reasons that is not, too long to get into in the podcast episode. Yeah. But we finally made the decision to start a family. And for so many years, it was just him and I. So the bringing in our two kids, I have a 4-year-old, almost 5, and an 18-month-old. And I feel like they have really created us to have more family time, space. They've actually created more balance for us. Because what are you going to do? Just I'm going to keep working on my laptop with my 4-year-olds right next to me? That's not going to happen. I mean, that's just so hard. I mean, it's like young children they need
attention. Yes.
They need a lot of attention. So, I think our balancing of everything has helped. That's helped, having kids, and we've been able to create some more space for our family and things like that. But yeah, it's taken a lot of personal growth. Him and I, he's done weekends, I've done weekends. We've really done a lot of work on ourselves to get to the point where we really work together now really well, and that's taken some time. I can't say that was always the case. I mean, I remember early on, especially in that 2-year kind of stint when I had quit my job and everything was stressful financially, the business, everything. I mean, my husband turned to me. He's like, if we don't change something, we're going to get a divorce. And that was hard to hear, but he was right, and I didn't marry him so we could start a business together or invest in real estate together.
Right.
I married him for a lot of other reasons. So we try to really work at having date nights, which we've done, and we'll watch shows. We'll just do things that have nothing to do with the business. So that helps, kind of create that balance. But yeah, I'll wake up and I'll be up. I'm an early person. I'll be up for like 3 hours in the morning. My poor husband gets up. He's just trying to wake up, and I'll shoot him 3 questions, and he's like, "I just need to wake up," So
let me get my coffee in first.
Yeah, I gotta get some coffee. So
what about have you guys? If useful, right? If people are listening and maybe they're finding themselves in a similar situation, have you guys found boundaries or rules or different things to kind of live by, right? So it takes the emotion out of it. Hey, I'm going to handle accounting. I own accounting. That's my thing. You're going to own acquisition. That. Have you guys defined boundaries that help kind of keep this, safe, I guess, if you will?
Yeah, we have. When we know what didn't work for us, and then we had a chance to so then when I had my son, 2013, I ended up leaving my consulting work kind of for good. So I've been back, more part-time, but certainly in our business, working on different projects since 2013. So we kind of had an opportunity to start again and to just try it again, and to really say, if I'm going to have some time and create some energy, to I'd rather work in our business and help with that. So when we did it again, we got better with the roles, and we got better with just kind of being clear on who's doing what. And also for me to work on stuff that works more with my strengths, and, I enjoy doing, and it also helps the business. We're both doing things that we need to grow our team. That's kind of where we're at, where we're growing our team. But, the more people we can take on to kind of take things off our plates is where we are kind of in our business evolution. But yeah, when I came back into the fold, we said, okay, what didn't work last time? Let's have more, delineation of roles. We also started a monthly kind of meeting, a monthly business meeting where we'll talk, because we were doing it at night, when we put the kids down. You're 9:00 in the evening, you're delirious. You just want to kind of just relax,
Yep.
So we started doing it during the day, where we'd have a business lunch. Kids were kind of taken care of for the day, so we had a business lunch, and then so we've worked on those sort of things. And I also know it works for our personalities. My previous work was personality assessments, so actually that's what I did, where I gave these assessments to teams to figure out how do they work best together. So I know my husband's personality to the T, and he knows me really well in that way. But we have to work through some things in terms of just our styles, and what works and what doesn't. And I have to kind of defend him in some, because I know what he's really good at and I know what he's not good at. I'm trying to say, okay, that's why we need this person to help here, because your strength is over here. So I'm able to use all my expertise around my consulting work in our business, which is really cool too. And I think, as a couple, you have to have fun together. There are times that we went away for our 10th anniversary. We got to do this again soon, just with 2 young ones and everything going on. We haven't made the time, which we need to, but we went away to California, and it was right when we had one kid, when our son was 2, and we drove the coast to California. It was the best time. And we didn't talk about work at all. Our business, we're it's fine. We literally had just fun. And when we just have fun together, or we go out to just have fun, we rarely talk about business. We're really good like that. Now, the tough part for us and the tough part for couples, I think, is the day-to-day, okay, dinner, are we going to, I have something to tell you, and, just trying to create that space of family time. That's where the kids came in, and that's where it's been really helpful. So, yeah,
the boundaries are important. I had another person on the podcast recently that said, don't forget why you're doing this real estate business. It's so that you do have the time to do the things you want to do. Otherwise it's kind of all in vain, right? So I think that's really cool that you guys find time to have time.
Yeah. And then to teach our kids that. And, if that means we have to do a few things on a weekend, that's fine. And then there's days I took my son we took our son to his first movie when my daughter was in her daycare, and he, one day this summer, it was a Wednesday. We're Zachary, let's go see a movie. That was cool. We could just go do that, and we didn't have to check with anyone, Yeah,
that's awesome. Very cool. So I want to get into, the theme of the show is real estate investing unscripted, right? As you know, so things that have happened, and I'm sure you've got a number of different stories over the 14 plus years, but do you have a good example of You went to the training, you read the books, you played the cash flow game. Nothing really could have prepared you for this scenario. What was it? How'd you get through it? And kind of how's it informed how you guys think about your business now on a go-forward basis?
Yeah, sure. There's a lot to pull from that, but I would say the one that was probably one of the more recent situations. We last year, and I'll be as succinct as I can here, but we last year got a 198 unit apartment building under contract, and we were set to close, I think, early December, and that was a big. That was a big project for us. It was an exciting project, expanding our markets, expanding our kind of investor base. All the things. We had done other multifamilies, but it was an exciting project, just like every project. But we had a lot to get in there and get it done. So anyway, my husband was busy. His strength is raising money, raising private money. And he was kind of moving forward on all that. In the midst of that, we also got an offer a couple months before that, or actually during the summertime, to sell our 18 unit. We had an 18 unit in Philadelphia. And like many people listening or learning about real estate investing, you can do a 1031 exchange. And I'm not going to go off on a 1031 exchange, but in a nutshell, we sold that during the summertime. All the gains that we made and the initial investment, we can roll into the new property in a certain time frame, tax deferred. So we were kind of set up to do that. We sold the property, made our investors, I think, 25% on their money, which they were very happy. Everyone part of that 18 units said, yeah, put us into the next project. That'll be great, which is awesome when investors want to keep kind of working with you. So we were ready to go. That was $750,000 as like a 1031 exchange that we had in the bank, quote unquote. So my husband found a custodian, and that's what you have to do, is find custodians to hold your money. And then he kept working hard to raise the rest of the money. I think he raised close to $2.5 million for that project. So he was working his tail off, to raise the money, get due diligence, all that good stuff. So we were about 3 weeks out from closing, and he was right there in terms of all the money that needed to be raised for the project, which was exciting. And then obviously the $750,000, that was kind of like our money, our investors' money, about 6 or 7 investors' money, and including ours. So what ended up happening, he kept reaching out to the custodian saying, hey, we're getting ready for closing, and they've been great. They were great up to that point, communication wise. And then he kept trying, no response, kept trying, no response, kept trying, no response. Our attorney was great. And we're like, you need to call them and send them a letter. I mean, now it's like 2 weeks till closing, right? So there's no response. And Matt, I think it was Matt, got the, idea to like just Google the company, because there was no response. And, we didn't know else. They were in Florida. So there was no way to, we were considering, there was a moment he had his ticket. He was just about to like book. Jeez. Seriously, like that's what we were kind of going. We were kind of going into like, you got to go into like vigilante mode, like, okay, whatever it takes. Okay, I'm going to Florida tomorrow. Like that's how you feel. And I'm in New Jersey.
$750,000. Like we got to find it.
Yeah. So, and it's just not ours. It's other people. So long story short, without getting too dramatic, we found actually on the forums, Bigger Pockets, this long, like very disturbing thread about the company. And this is obviously as we're trying to uncover what's going on. And pretty much my husband ended up getting on the phone with a lot of the people in this thread. And long story short, the gentleman ended up being like a mini Bernie Madoff and ended up pretty much just, taking a lot of people's money. I think close to like 10 million or something. I don't remember how much. So anyway, yeah, it was really, really bad. So what ended up happening was now we have two, like, first you feel like you're just like, is this really happening? Like, especially in our, I don't mean to say in a cocky way, but especially like where we were in our business. We were not new to this. We were not, it just wasn't something that was even in our radar that someone that was a 1031 exchange company or custodian would do that or could do that. Do you know what I mean? Like it seems
like they should be regulated and someone's looking at them and like, yeah, right.
I don't know why you wouldn't use any other. I don't see how people could be a custodian of that kind of account.
That's the point of having a custodian is so the money is safe.
Exactly. Right. Yeah, right. That's a very good point. So, it just, the story just started to unravel. He started to talk to all these people and everyone had the same story. So we weren't alone. And there was a couple other people that were a little more money than what we had at stake. Beyond the fact that now, okay, we have to go after our money. That's a problem. Now you have to start to say, we got to get to closing, because, now you have multiple issues. But the biggest issue at that moment was, if you don't have an asset, you have nothing to give those investors who now have lost their money. Nothing. You could what are you going to give them, an IOU? I'll write you a letter and say, hey, when this all comes, we could have done that. They knew their risks. People know their risks in real estate investing. However, we knew that was the most important thing, was to get to closing. But obviously we're shy $750,000. Now, we didn't need all that to close, because we had a bunch of money set aside for capital expenditures once we closed on the property, because it needed a bunch of kind of value add, investments. So I forget how much we needed. It was less than that, but we ended up, which you were instrumental. And that's when you start to call the people that you like, you respect. You start to say, who do you know can do a short-term loan? Not private money, but literally, they're loaning me this money for a short term. I'm going to keep raising money afterwards. So that's the first issue at hand. So my husband worked his tail off, and people like you, Matt, you were so helpful, and we really are appreciative of that. And you got to go to the people that, know you and can connect you to the right people. We didn't know a lot of the short-term financing guys. That wasn't something that we used a whole lot of. So anyway, we had somebody lined up. They were able to loan us the money at a very good rate for him and us. But it was, I'm like, I want to be there someday. But anyway, what was so that was the first issue. And God bless my husband, but he just put his head down and got it done. And we were able to close on the property and take ownership, which was awesome. Then the next kind of question, and really the bigger one, was, how do you make up the money, as in terms of because these were equity partners. When you do projects like this, syndications, you're really there. You're not just raising money so they're lenders. They're not lenders anymore. They're partners in the project. So what ended up happening there was, my husband takes a piece of the building. My husband, as well as like a general partner, him and a couple of people are the general partners, and then there's limited partners, which are in essence the investors and the people that are not loaning you, are investing money to become a partner in the project. So it's just like they own part of the building as well.
The passive investors, right?
You got it.
Yep.
So what ended up happening was, the way it sliced and diced, him and is really his second gentleman, great guy, Ben, he does a lot of the underwriting and a lot of financial pieces of the part of the puzzle. They really pretty much just slashed their equity of the building to kind of make everybody whole. They own a very small part of the building, but really all of it, pretty much most of it, was given to the investors to make them whole. And then he called them all. I mean, what do you do? You're not gonna send an email. He called every one of them. There's only 6 of them, but he called every one of them, told them what happened. And as he's telling them what happened, he goes, and here's what I'm doing about it. So at that point, it wasn't right when it happened. It was like 2 weeks after, because he wanted to tell him, like, this is what I'm doing. This is what I got figured out. There's a lot of things to figure out. We had talked to our accountant. How's this going to impact everything? So he figured it out, and everyone was like, that's, they're like, okay, that's great. And you know what? None of them were worried, because they were made whole. In essence, they have their same equity in the building. They just don't have the cash. But at this point, doesn't really matter. It's not about the cash. It's about their 2%, 5%, whatever equity stake they had. So it was a tough pill to swallow, Matt. I mean,
that's brutal.
It was a really tough one. I mean, it was tough for me, and I was a little more on the sidelines, because I do parts of the syndication work. I help a little bit in the marketing and communications, but my husband was on the front line, and he works very hard on this building. And but he works hard like he owns it 100%. It's not like he's like, screw that building, I don't really own it. He owns a part of it, and along with his investors, and he is just as committed to making that successful as though he owned it 95%. So the big lessons, I mean, you're like, how can that happen? But you have to look at yourself. And he vetted the company. But, I would also say, he vetted them to a point, and could you have gone to our accountant, our attorney, like these people we work with all the time? Could they have given us a recommendation? Well, in hindsight, that probably would have been a better approach. Yeah. I mean, he vetted this company as much as he could, but it still wasn't a recommendation. So that was a learning for us. And we will never do that again, obviously. And also, you have to make it right for the investors, even if that means you take a haircut and that's okay. Like, you got to be prepared if you're going to raise money. And now, during this is happening, Matt, my husband's writing a book on raising private money. I wish I was joking, but that's literally, he's in the middle of writing the book at that moment.
That's hopefully that story made its way into the book. You get some value back on it. That's crazy. I think there's a ton to learn in that story. I think one of the big things I think, and you guys do this right, is you got to be thinking long term when you're thinking about building investor relationships, right? Like the easier and probably less painful thing to do would have just been to walk away from it and be like, sorry guys, like kind of not our bad. Like, we'll catch you on the next one. Yeah. But that destroys those relationships. Now those 6 investors are investors with you guys forever. I would imagine, right? Because you did right? Yeah. So like, how do you put a value on that? Like, you maybe own less of that building, but
it's short-sighted to focus on that. Yeah.
So short-sighted. That's a incredibly awesome and horrible story all at the same time.
Yeah. And it's still unraveling. It's kind of like, it's kind of like gravy. If we just then will buy more of the building. That's kind of like our thought process. Because at this point, we're thinking of all the money in essence is really ours more so than the investors at this point, because they've been made whole. So, things work out. I do believe that things happen for a reason. And I do believe you got to just keep getting better in this business. So, there's moments that we've made other mistakes and you look back and go, okay, we could have given up then. 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 Yep. But what keeps you going are obviously perseverance and the fact that we want to create a legacy for our family and a legacy for our kids and just, make things better. Are we perfect? No. Do we make a lot of mistakes? Yeah, of course. But we're really committed to getting better and living a bigger life. And to do that, shit's going to happen. Really, bad things are going to happen. And I looked at my husband when he came home and told me that. I mean, Matt, I said to him, I could be the wife of that guy. Right. Yep. Now, my husband's not coming home to me to say, I'm going to make this right. We're going to figure it out, because that's like my positive husband. Like, he just figures shit out and he's amazing at that. But no, I could be that wife, the wife of the guy who took all these people's money. That could be me. And I'm like, I'm so grateful. I'm like, you start to become grateful of who you are and what you're doing. And it's not about stuff or sometimes dollars, but like who you are. Because that's not something you can buy. That's not something you can't put a price tag on that. And it was tough. I'm not going to say it wasn't, but I think those are the things that got us through. And we have a lot of faith, me and my husband. So we prayed a lot about it. So.
You figured it out before, like you start to build some confidence. Another kind of like underlying theme that's starting to, I think we're on episode 7 or 8 here, that's starting to like come through in the show is that if you're going to be successful in this business, like you have to have a very high degree of grit and like just being okay with getting punched in the face. Yeah. And moving on, because like each one of these stories that we hear, and this is a good one, like it takes a lot of resolve and a lot of just like, I can't quit. Like I can't, it's not within me. And like if this story scares you and you're listening to it, like as it probably should, something like this is eventually going to happen to you, right? So like be ready for it. Know that there's a lot of good people out there that can support you and pull you through it. But like on the other side of that is like, if you don't ever want to deal with something like this, like real estate may not be your game.
Yeah. And you can't always be prepared for everything, but you can be prepared in your relationships and just, and it wasn't like we had to create relationships. Like we had a relationship with you, Matt, you knew us, you know, that kind of thing. And you were like, hey, give this guy a call. And that was like really helpful. Like that was hugely helpful because you're in the business of financing stuff. So
that's what we do. Anyway. That's really a really interesting story. I'll be interested to see how it plays out. Hopefully you guys get made whole, but wow, that's something else.
The FBI is involved now, which obviously, And what's interesting too, like it kind of like should be on like a TV show at some point. But what's interesting about it was that this gentleman, or people that sometimes these things occur with, we spoke to a couple of the people that actually had more money lost. And I remember talking, Matt talked to the one gentleman quite a bit, and he said, and the gentleman told Matt that he did like 5 deals with him. He goes, this is my 5th deal. He never did this. So it also reminded me, Matt, that if you don't keep yourself in check, like one bad choice leads to another bad choice. Yep. Another bad choice leads to another bad choice. I don't think this guy got up and said, I'm going to screw all these people. I don't think it was that like switch went on. I think it happened
slippery slope.
It was a slippery slope. That's what I think. And I think that just as a business owner, as an entrepreneur, as a person in this world, like, got to keep yourself in check to ensure that you're just doing right by yourself and other people, because little bad decisions can really add up, especially in this business that can have some shady characters in it.
They get accretive very quickly if you're not careful.
Exactly.
Well, cool. So listen, you're obviously a rock star podcast guest. We also have your own show. Tell us a little bit more about your show, what it is, what it's all about, where they can find it. Give us a skinny.
Yeah, sure. So myself and one of our business partners and good friend and colleague, Andressa, her and I are co-hosts together. We run a podcast called the Real Estate InvestHER Show. So the concept about it really came from her and I kind of masterminding together and talking about different things in our businesses. And we're just like, we need more inspiration, and wouldn't it be cool to like bring women together, just because, it's an interesting business. I'm sure Matt, it tends to be a little more male dominated from the investment side. And, there are women investors, really successful ones, which we've been interviewing. We're up to like 33 shows, and every woman we interview, just one after the other, is just top notch, really, really great ladies. But what we found was, we work with men really well, and I love men, of course. This is not like a men bashing show or anything. But what I have found in talking to a lot of women as we've got going was, the challenges and the kind of like the things you work through in this business are sometimes a little unique to women. And, whether it's starting out and they may not feel comfortable asking questions in front of another group or whatever it is, whatever the kind of stuff is, developing a community of kind of like creating that like safe space that women can really encourage, mentor, or be a mentee has been really just every woman that we've talked to about it that's in this business is really like, that's awesome. I need more of that. So the Facebook group, we have like almost 500 women on the Facebook group so far, and our podcast is growing. We're doing meetups and creating some workshops and it's pretty neat. We hear from ladies and they just thank us. And it's like, okay, we're doing something right. This is not, you don't feel like you're just kind of, running a podcast is not something that, if you literally have nothing to do, there's something you do. It's something you have to feel is going to add value to yourself and to other people. So yeah, and I used to do workshops and things like that. So I love the idea of kind of teaching and sharing, which podcasts kind of help. So yeah, we're really excited about it. And our mission is to really help women not only become financially free, but also create balance in their life, which, obviously men need balance, but women have different kind of, struggles, challenges than men do. So that's what we also talk about in the show. We talk a lot about, the balancing act. There's a lot of mothers with young kids or older children or no children, but it always seems like, the balancing act has to be talked about and figured out, because you want this, but you also want to be a great mom or a great wife or just a great community member. And so that's a little bit about the show, but yeah,
that's awesome. Check it out, the Real Estate InvestHER Show. Is that the realestateInvestHERshow.com?
Yeah, it's actually it's the realestateInvestHER.com. We couldn't get show on there. Yeah.
Gotcha. Very cool. No, I love it. I think the playbook and a lot of the stuff that's out there is kind of male dominated for whatever reason. So the more we have out there, I think is awesome.
Yeah.
Very cool. Very
Thank
cool.
You.
Well, listen, we'll get you out of here on this. If people want to get a hold of you, obviously we know where the show's at now. Is there a way people can reach out to you and learn more about what you guys are up to?
Yeah, absolutely. So the show's obviously a good place in terms of like, the what we're up to in terms of like helping women investors. On the DeRosa side with my husband, it's DeRosaGroup.com. And you can learn a little more about me and my husband, what we've created, what we're up to. And, and you check out my husband's book. It has the story I just shared in the book. I think it's one of the last stories, but Bigger Pockets, published the book in August, and it's called Raising Private Capital. And Matt, you were so kind to endorse it and everything. And so, yeah, it's really been a really neat journey with that book as well. And, being able to kind of share what we've done and how do you then do it right and take care of people and protect people's money and enroll people and the whole story. So, but yeah, DeRosaGroup.com or eFaircloth@DeRosaGroup.com is my email. So you're welcome to reach out anytime. I'm active on BiggerPockets, but get a little nutty. So email is probably the best way to get a hold of me. If you have any questions or you want any follow up, it's eFaircloth@DeRosaGroup.com.
So check out the DeRosaGroup.com. They've got some cool projects going on. Liz, really appreciate your time. This was awesome. It was packed with a lot of information. I think I tried to kind of distill some big kind of points that I got out of this was, kind of at the beginning, get schooled. You guys talked about how the cash flow game and the Rich Dad, Poor Dad books. And I think the even more important thing is like the learning never stops, right? Like no matter how many deals you've done, you got to continue to look for places to learn and sharpen the tools. I think another thing that I love that you said is like, get focused around who you are, what's your business. And then like once you have that, whether that's flipping houses or doing apartment syndications or whatever it is, like you kind of got to pick. You can't chase all the shiny objects.
Absolutely.
And then talk about it. Talk to everybody because you never know who's gonna be a potential investor or partner or whatever. And the last one I think is you got to think long term in this business. I think the disservice that a lot of the TV shows and other things out there is that like this is a business that people get wealthy quick in.
Yeah.
It couldn't be further from the truth in my experience. I started thinking in terms of like 10-year increments on the relationships that I try to build. Right, of like I think like you said, like we knew you guys for 3.5 years before we were able to like kind of do something together, but like. It was a good relationship. We invested in it, like it paid off, right? So like, I think you got to be thinking long term, and that informs all the decisions you make in terms of which properties you purchase, but also how you treat your investors and how you treat almost everyone that you come in contact with. This isn't a trade today. This is something that we're building for the next decade or more. So those were my takeaways anyways. Anything you want to add?
No. Thanks so much for being on the show. I love what you're up to, and you do great work at your company, and you just, you offer so much to investors. So I appreciate being on here.
Appreciate the kind words, and thank you all for listening. And thanks again, Liz. For more great resources, definitely check out our website, fundthatflip.com. Otherwise, look forward to having you all back listening to the next episode. Thanks again.